Let's dive right in. Today we're spotlighting 6 Iberian stocks to watch for 2026, as picked by analysts at Kepler Cheuvreux. While US markets get all the attention, Spain and Portugal are home to global leaders in banking, fashion, energy, and tech. These companies are shaping the future, and most investors overlook them. I'll break down what each company does, why the experts are bullish, and my own take on their potential. This isn't just about stock tips, it's about understanding the why behind the picks. Ready to discover some serious opportunities? Let's get started, and don't forget to hit like. It helps the channel and costs you nothing. First up is Iberdrola, a Spanish multinational powerhouse that's become a household name in the world of energy. Founded over a century ago, Iberdrola has evolved from a traditional utility into a global force driving the clean energy revolution. Today, it stands as one of the world's largest energy companies, with operations spanning Europe, the Americas, and beyond. Their influence stretches far outside Spain's borders, shaping the future of energy on a global scale. Their edge? Iberdrola is a true global leader in renewables, wind, solar, and hydro, years ahead of the green energy curve. They've invested billions into clean power, building one of the world's largest portfolios of renewable assets. Governments everywhere are pushing for clean energy, and Iberdrola is cashing in on subsidies and long-term contracts. Their close relationships with regulators and policymakers help them secure favorable deals and steady growth. But they're not just building wind farms. They're investing heavily in smart grids, digital infrastructure, and cutting-edge energy storage. This makes them essential to the clean energy transition, ensuring power is reliable and available when it's needed most. As countries race to meet ambitious emissions targets, Iberdrola's predictable long-term revenue stream stands out. Their business model is built for stability, even in uncertain times. Unlike risky tech startups, people always need electricity, and increasingly, it has to be green. Iberdrola's services power millions of homes and businesses, making them a critical part of daily life. Their global footprint and proven execution on massive projects give them a huge advantage. From the US to Brazil, the UK to Australia, Iberdrola is building the backbone of tomorrow's energy systems. The utility sector is known for being defensive, but with renewables, Iberdrola offers both stability and growth. They're uniquely positioned to benefit as the world shifts away from fossil fuels. Analysts see their valuation as reasonable, with plenty of room for earnings growth as new projects come online. Their track record of delivering on promises makes them a favorite among institutional investors. Long-term power purchase agreements lock in revenue for decades, a big plus for investors seeking security and predictable returns. In short, Iberdrola is a well-run essential service provider riding a multi-trillion-dollar trend. Their commitment to innovation and sustainability sets them apart in a rapidly changing industry. That's why it tops the list for 2026, earning recognition from both industry experts and investors worldwide. If you want exposure to the energy transition, this is a name to know. Iberdrola offers a rare blend of reliability, growth, and global impact. Let's move to the next pick. Transition. Next up is Banco Santander, one of the world's true banking giants with a legacy stretching back over 160 years. Headquartered in Spain, Santander has grown from a regional lender into a global powerhouse, consistently ranking among the largest banks by assets worldwide. Today, Santander operates across Europe and the Americas, serving more than 160 million customers in over 40 countries. Its footprint covers major economies like Spain, the UK, Brazil, Mexico, and the United States, making it a truly international player. So, why does a massive established bank make this list? Because the financial environment is shifting in their favor, and Santander is uniquely positioned to capitalize on these changes. Higher interest rates are a game changer for banks. They allow institutions like Santander to earn more from lending, boosting profits. Santander's strong balance sheet and global presence mean it can take full advantage of this trend. Their global reach is a huge strength. If one region faces economic headwinds, another can help offset the impact. This geographic diversification helps smooth out earnings and reduces risk, making Santander more resilient than many of its peers. This broad diversification makes their earnings more stable and predictable, even when markets are volatile. Investors value this kind of consistency, especially in uncertain times. Santander's also investing heavily in digital banking and technology, rolling out innovative services and mobile apps to keep pace with fintech disruptors. Their digital transformation is helping them attract younger customers and streamline operations. Beyond traditional banking, their auto finance and wealth management divisions are major growth drivers, expanding their revenue streams and deepening customer relationships. European banks have long traded at a discount to their U.S. counterparts, but as the macroeconomic picture improves and interest rates rise, that could finally start to change, unlocking value for shareholders. Analysts at Kepler Cheuvreux believe the market is underestimating Santander's true earnings power and growth potential, especially as the bank continues to modernize and expand. With a blue-chip reputation, global diversification, and a management team focused on technology and growth, Santander stands out as a forward-thinking leader in the banking sector. Plus, the stock looks undervalued compared to U.S. peers, offering an attractive entry point for investors seeking both stability and upside. In summary, Santander offers a rare combination of stability, global reach, and a clear path to growth as the banking landscape evolves. It's a compelling choice for those who want exposure to the financial sector without taking on excessive risk. For investors looking beyond the tech sector, Santander is a solid pick with real potential. Let's keep going. Transition. Third on the list is Inditex, the powerhouse behind Zara and several other global fashion brands. Inditex revolutionized fast fashion, getting new styles from design to store in weeks, not months. This agility lets them capitalize on trends faster than anyone, minimizing markdowns and maximizing profits. Their seamless integration of online and physical stores sets the industry standard. Inditex's global expansion, especially in emerging markets, fuels ongoing growth. They use cutting-edge tech like RFID tags to track inventory in real time, boosting efficiency. Even with inflation, they maintain pricing power thanks to strong brand appeal. Sustainability is a growing focus, with real progress in eco-friendly materials and processes. Inditex is adapting fast, appealing to both trend-conscious shoppers and ESG investors. Their business model is resilient, data-driven, and future-proofed. That's why analysts see them as a top pick for 2026. If you want exposure to global retail innovation, Inditex is hard to beat. Let's check out the next company, Transition 15. Now let's talk about Galp Energia, Portugal's top energy company. Galp is using profits from oil and gas to fund a major pivot into renewables, especially solar. They're building a large clean energy portfolio, leveraging their expertise and capital. The dual-engine approach legacy oil assets provide cash flow, while renewables drive future growth. By 2026, a big chunk of their earnings will come from green projects. They're also exploring green hydrogen and EV charging, future-facing bets. The market still values Galp as an oil company, so you get their renewables business at a discount. As their green projects come online, the stock could be re-rated higher. It's a classic value plus growth story. Risks remain, execution and oil price swings, but management has a clear plan. For investors seeking income, value, and exposure to the energy transition, Galp is a compelling choice. Let's move to the next sector. Transition. 14. Fifth is Amadeus IT Group, the invisible tech giant powering global travel bookings. While you may not see their name when you book a trip, their technology is working behind the scenes every step of the way, ensuring your journey is seamless from start to finish. Based in Madrid, Amadeus runs the systems that connect airlines, hotels, and travel agencies worldwide. Their infrastructure is the digital glue that holds the travel industry together, processing millions of transactions every single day. If you've booked a flight online, checked into a hotel, or even changed a reservation, chances are you've interacted with Amadeus's technology, often without even realizing it. They provide essential software for reservations, inventory, and airport operations, making them deeply embedded and hard to replace. Their systems are mission-critical, relied upon by thousands of travel providers to keep operations running smoothly. As travel rebounds post-pandemic, Amadeus's transaction volumes and revenues are surging. The return of business and leisure travel is fueling a rapid recovery, and Amadeus is capturing the upside. But it's not just a recovery play. They're gaining market share and expanding into hotels and hospitality tech. Their reach now extends beyond airlines, powering everything from hotel bookings to car rentals and even cruise lines. Their scalable software model means higher margins as volumes grow. As more travel companies adopt their solutions, Amadeus benefits from powerful network effects and recurring revenue streams. Amadeus is also investing in AI and analytics, helping clients with dynamic pricing and personalization. These innovations allow travel providers to optimize revenue and deliver tailored experiences to travelers. The long-term trend is clear. Global travel is set to exceed pre-pandemic levels, especially with a growing middle class in Asia. As more people travel, demand for Amadeus's technology will only increase. Amadeus is the picks and shovels play for the travel industry's growth. Rather than betting on a single airline or hotel chain, you're investing in the infrastructure that supports them all. Instead of betting on one airline, you're investing in the backbone of the entire sector. This diversification makes Amadeus a resilient and attractive, long-term investment. That's why analysts are bullish for 2026. With strong fundamentals, expanding markets, and a critical role in global travel, Amadeus is well-positioned for future growth. Let's wrap up with our final pick. Transition. Last up is Cellnex Telecom, the backbone of Europe's mobile networks. Cellnex owns and operates cell towers and fiber infrastructure, leasing space to multiple carriers. Think of them as the landlords of the digital world, with long-term inflation-protected contracts. The rollout of 5G and the explosion in mobile data are driving huge demand for their infrastructure. Cellnex's aggressive expansion, buying towers across Europe, has made them the continent's largest independent operator. Their business model's highly defensive mobile data is now an essential utility. Even in a downturn, people won't stop using their phones. Growth comes from adding more tenants to existing towers and building new ones for 5G and IoT. They're also moving into smart cities and edge computing, expanding their addressable market. Analysts love the combination of stable cash flows and long-term growth. Cellnex is building the foundation for Europe's digital future. That's why it's a top pick for 2026. Let's recap what we've learned. Transition. There you have it, the top 6 Iberian stocks to watch for 2026. From green energy and fast fashion to travel tech and digital infrastructure, these companies are leaders in their fields. They're not just speculative bets, they're established, profitable, and positioned for long-term growth. Always do your own research, but this list is a great starting point for diversifying beyond the US market. Which company caught your eye? Let us know in the comments. If you found this helpful, hit like and subscribe for more investing insights. Thanks for watching. See you next time.